You would have lost hope in trading, not knowing that doing this, and this, and this could change your life forever and make you a profitable trader again. The best thing about this strategy is that you can start using them today, immediately after watching this full video, following all the step-by-step process, and make massive profits when you apply them on your charts. It works in crypto, Forex, synthetic indexes, stocks, binary, and anywhere you can use candlesticks charts for trading. This video is a full course, and as you pay undivided attention to everything you will learn in this video, you will start trading supply and demand with confidence, and you begin to notice how your trading life will change for the better. In this video you will learn 1. How supply and demand work. 2. How to trade supply and demand profitably. 3. The types of supply and demand you should avoid. 4. The best time frames to find the most accurate supply and demand opportunities. To begin, let's first understand the meaning of supply and demand trading. Supply and demand are the hidden forces driving currency price movements. Supply is the amount of a currency that sellers are willing to sell at a given price level, while demand is the amount of a currency that buyers are willing to buy at a given price level. When demand for a currency is high and supply is low, the currency's value begins to ride in an uptrend. Meanwhile, when demand is low and supply is high, the currency's value depreciates and begins to fall in a downtrend. Some traders usually make this mistake of thinking that supply and demand only work as a reversal strategy or pattern. This is what they do. When they see price moving like this, they wait for a price movement like this one, then they mark that area as a supply area. After some price movements, the market begin going back to that area. At this point, the traders have placed their sell limits at the top of the supply zone. Their stop loss will be somewhere here, cause they believe that market cannot move and of that spot anymore. Then, to their greatest surprise, the price will break that zone and keep moving higher. Some of these traders will then increase their stop loss, and even at that, the price will still break it too. So much loss is made out of a single trade. While all these are happening, the traders fail to realize what they are doing. They are actually going against the first golden rule of trading. They are trading against the trend, which is in contrary to the popular trading rule, which states that the trend is your friend. Supply and demand trading could work against the trend as reversal strategies, but that will bring you more losses than profits, which is not something you want. You want a strategy with more consistent win rates and predictability. It is better and more profitable when you trade it along with the trend, and I am going to teach you exactly how to go about that. The best way of trading supply and demand is by trading it along with the current trend of the market, and to trade it with the trend, we need something that will help us to stay afloat with the trend, and that's where the moving average indicator comes in. The moving average is not just an indicator, it helps us to identify the current trend of the market, and even helps to identify strong trends and low volatile trends. Using the moving average with supply and demand trading will help us to figure out the best trades for our entries. For this strategy, we are going to be using the 50-period exponential moving average. This is the best moving average period for identifying trends and flowing with the trend. Here is how to get them on MetaTrader and TradingView. For MetaTrader 5, first of all you locate the indicator icon at the top of the chart. There you will find the moving average indicator. Click on it and use these settings. Set the period to 50. Method should be exponential. Apply to close. Then choose any color or pixel size of your choice. Leave the remaining settings as it is. When you are done with that, click on Save. Then you have a 50 exponential moving average on your trading chart. For TradingView, click on the FX button on the chart and search for moving average. Then click on moving average exponential. When it's shown on the chart, you can click on the indicator to make changes. Now change the length to 50. The source should be set as closed, and that's it. So simple. Leave the other settings as they are, and you will have a correct 50 exponential moving average on your chart. Now that we have the moving average set up, let's see how we can implement it into our strategy and use it to find better supply and demand trading opportunities. Take a look at this chart. What trend is this? Yes, it's an uptrend. But what makes us so sure that it's a strong uptrend that is capable of giving us a good entry? As you can see, the 50 exponential moving average is moving freely below the price movement, which indicates a very strong uptrend. And after that came a trend retracement here, which marked the beginning of a demand structure. What happened here is that market came to this spot and the buyers went in massively into the trade to push the market up. Any other trader can see this and feel like it's a great opportunity to enter a trade immediately. But for wise traders, we will wait. Patience is a strong virtue in trading. Since the price has first moved well from that first spot, we will mark that area as a strong demand zone, where a lot of other wise buyers will be looking out for to enter the trade again. Remember, you must always wait for the second move of the buyers, because sometimes the sellers can be very active too in turning the trend retracement to a trend reversal. That being noted, let's move forward. When the price returns to the demand zone, there are two things it does. It either keeps going down, changing the trend, or it retraces and keep moving as a trend continuation, which is our goal to make profits for ourselves. But how do you make sure you enter the trade the right way, in which it will go in your planned direction, and not end up as a trend reversal? Subscribe to this channel now and make yourself part of the family as I reveal to you what to do next. Make sure you turn on the post notification so you never miss on any of our future strategies and trading secrets which you will learn on this channel. When price returns to the demand zone, what you will be looking out for is the best entry signal candlestick to give you a go-ahead to enter the trade. You don't want to take any candlestick that just appears on that zone as a go-ahead. You must wait for the best supply and demand entry candlestick. And there is no better candlestick than the big momentum candle. A momentum candle is a candle that has more body than wicks. It represents the momentum of the buyers or sellers in a certain market conditions. In this case, as a bullish momentum candle, it represents that the buyers have gained full control of the market movement and are ready to push the price up. When it appears at the demand zone, it becomes a signal to enter the trade and to plot your risk management. You place your stop loss a little pips below the first demand move and your take profit target at the next significant high. Doing this will ensure that your risk is tight and your profit target is great to accumulate good profits for you. Don't extend your stop loss too much, because the first demand price move is considered as a strong support zone where sellers won't find it easy to break into. You can extend your take profit level to your desire, but make sure that you use break-evens in order to secure the profits you have made already. In the first move of the trade, don't be too greedy, else the market will surprise you. Let's take a look at another example. As you can see, this chart is in a downtrend. Why? Because it's developing lower lows and lower highs, and the 50 exponential moving average is floating above the price movements, which means it's a confirmed downtrend. So after some price movements, the market decided to retrace. And later, we can see price falling from a particular area on the chart, where we are going to call a supply zone, because there was a good price movement from that zone. Now we wait on price to retrace to the supply zone and give us our entry candlestick, which is the bearish momentum candle, and as you can see, the price came to the supply zone and dropped a bearish momentum candle, which confirms our entry. After sighting the bearish momentum candlestick, then it's time to enter the trade, and draw out our risk management plan. Since the price went a little bit higher than the first supply move, you'll place your stop loss a few pips above the second touch, and your take profit target will be placed at the next significant low. And as you can see on this trade, the take profit target was hitted and profit secured. And that's how you can be making money consistently with this supply and demand strategy if you are following these rules. Here are the types of supply and demand trades you should always avoid while trading this strategy. The type of supply and demand you should always avoid is the small-sized moves. These ones are too small to move the market. You must always avoid them. What you need is a broader move like this one. This is the one that is capable of moving the market. Make no mistakes about it. And you must always make sure that the first move of the supply or demand zone touch the moving average line before waiting for the return of the move. The best time frame to find these supply and demand trades is the 4-hour time frame, the 1-hour time frame, and the 15 minutes time frame. Don't go lower than that, else you risk getting a lot of false signals. If you are a swing trader, use the 4-hour time frame. For a more patient trader, use the 1-hour time frame. But if you are a day trader, stick to the 15 minutes time frame. Never trade more than one time frame. Use only one time frame for this strategy. Trading is a business, and it can be learnt and mastered so well that you know exactly what you are doing on the charts and know what to expect in any trade you take. If you want to register to my one-on-one online mentorship class, check the link in the bio to contact me. Subscribe to this channel right now so you don't miss out on our future strategies. See you in our next video.